Good afternoon, thank you. So I'm here today to talk about Fishing Republic. We are an online retailer. We're also a bricks and mortar company. We sell fishing tackle. I'm CEO. I've been in the company since November. We've just undertaken a big strategic review. The company wasn't performing as well as it could have. We looked at changing things around. We've got a new management team in place. I'm leading it up as the COO. I've come from major retailers. I've come from Primark. I've come from Barclays, Morrisons, BT. Done lots of turnarounds before. This isn't a turnaround. This is a growth business. Joined in December. I was appointed to the board this March, and I'm now leading the operational change through its transformation phase. What is our business? We are one of the largest fishing tackle retailers in the UK. We currently have got 18 stores. We joined AIM in 2015. £3 million company. We're going to be declaring about £9 million this year for last year's results. We are growing. The fishing industry is growing. We've got a multi-channel model. We have destination stores. We have an online model. Our online sales haven't been great. Competing with the rest of where the world's going with e-commerce, it was always in our back pocket. We didn't think it was part of our demographic. Revenue growth, H1, 4 million. To the end of the year, another 5. We're going to be declaring about 9. The fishing tackle marketplace is fragmented. There are 2 main players in the market, ourselves and our competitor, Angling Direct, and there's probably about another 2,500 mum and pop type stores that they're there as a bit of interference and noise for us. Do we acquire them? Do we play with them? Do we just ignore them? It is still fragmented. There's still plenty of opportunity. We could look at consolidating the sector. We could look at just growing our e-commerce side. We've done a lot of bricks and mortar acquisitions. We're at 18 stores. We were 19 this time last year. We've actually taken one out. It wasn't performing. We're going to start looking at doing that as well. The market. I'm not a fisherman, and I was really surprised by that. It's the 6th largest UK sport, classed as a participation sport. It is highly fragmented. There are specialist retailers out there. We deal with the brands, they deal with the brands. We're nice and big, we can get better margin, we can get better product range there. Growth challenges for the smaller retailers is the stock range. We used to hold £5 million worth of stock. We know the small companies can't, but also we shouldn't have been holding £5 million worth of stock. That was a bit too much for us. We want to be moving it quicker. We want to be shifting that stock through. The market is changing. People don't want you to hold last year's stock. They want this year's stock, even if it is just a different colour or a different stripe down it. Fishing has changed. Other difficulties, they had difficulty in obtaining bank financing, lack an easy exit route. We've got no debts. We're lucky enough that we've got no outstanding debts at the moment. We've got a clean sheet. There's a national angling strategy that sort of finishes this year, but there's going to be another one coming through. The government's trying to promote it. It gets people outdoors. Fishing is an outdoor sport. It gets people outdoors, even if it's watching, participating. It's something that gets people going. The demographic has changed, as I've mentioned. Historically, it was the plus 40s, white, middle-aged man. Actually, 60% of the market now is younger. They're the 20-year-olds. 40% of that is women in fishing. We've got to adapt to that. We've got to change our market. We've got to stop just catering for what we thought the market was going. It's now changed. These are some of our stores. We've got 18 stores. They are big footprint stores. They're normally on the outskirts. They're not city centre stores. They're like warehouses. They're laid out like a typical retail store. You have to go right to the back to get your bread and milk. You get your fish baits. But by doing that, you're walking across all the other products in the stores. We've got quite a wide geographic pattern. I'm not looking at growing bricks and mortar stores anymore at the moment. I'm going to look at what we've got there, but e-commerce is where we need to be pushing. Doesn't mean I'm not going to do anything with these. We're going to reinvest, we're going to rebrand, we're going to look at the stock and the range that we hold. Sunderland, great store, it's on the coast. Why aren't we selling pure just sea fishing gear there? What we tried to do historically was, if Sunderland's one of our stores, it needs to have everything, every discipline, course, carp, match, sea, fly. So we held 200 grand's worth of stock there. We'd hold 200 grand's worth of stock at the others. It was the wrong model because equipment wasn't selling. We weren't ranging and merchandising correctly. 18 destination stores. We've got 4,000 square feet plus each store. Extensive product range. We catered for everything, and every store catered the same. It was a cookie-cutter approach. They cater for all the disciplines. Located out of town, light industrial estates, plenty of parking, plenty of access. It draws customers from a wide radius. They weren't where your Tesco's were, but they were on an industrial unit. They were easy to get to. Since IPO, 2015, we've opened 10 new stores. We opened 10, we closed down 1. We've got enough at the moment. Last year, our store sales accounted for 77% of our revenue, 23% only online. We believe that should be at least a 60-40 mix by the end of this year. There's more demand online. People are coming into our stores with their phone already, looking at the prices. Nice, they come into our store, they can have a look, they can pick the product up, but they're going straight online and buying it online. Sometimes because they don't just want to put it in their car on the way home. Sometimes because we don't have that particular model they want in stock. Sometimes our pricing wasn't right. Online's great for us. It's growing. We never tapped the market correctly. Everything was done in-house. The company was founded. It was treated as a family-run business. We had someone that could develop a website, let them develop it, rather than outsource it and get a third-party website that will give us the tangible bits that we need, the better shopping experience, the customer experience, making sure our prices were correct and actually they were competitive as well, rather than focusing on development of a website. We launched a new website March last year, hence a nice spike. It's been growing. We're going to launch another new website at the end of this month. We're hoping to exceed that again. We've outsourced our website now. We've got a third party building that. Close to home, so we've kept it local. It's another Sheffield company that's going to be building it for us. We're going to launch again. We'll have some new exciting features on that. It is our online strategy. This is what we're going to be doing. We want to make more of this. We want click and collect. We want click, try, buy. As I said, the demographics change. Social media is massive now. Facebook, Twitter, Instagram. People are on there. We've got a massive client base. Every one of our stores has got its own Facebook page. People are on there looking what the trends are, where people are fishing, what they're buying, what's been caught in the local fishery, in the local lake. We're continuing our content development, our blogs, our featured fishermen. A lot of our store managers are actually celebrities in the fishing world. We don't use that enough. We don't promote that enough. They're there to give advice and training. We have late night Thursdays now for young groups to come in and learn about fishing. We go out to the fisheries and teach people how to fish, how to cast. Our sales, how they're split by our disciplines. As I said, there's lots of different disciplines. Carp, which is the biggest discipline in the UK today. Carp, coarse game, sea. We cover them all, but we've tried to cover them all at the same place. We're going to refocus that. We're going to realign that. We are still going to keep the share there, but we're going to make sure that carp fishing we will do at certain stores, sea fishing at certain stores. Our growth, this is our bread and milk. 45% is consumables. They come in for the bait. You come in, you buy the consumables, it's got a shelf life, you have to keep buying it. Start a season, you build it, you stock up on it, you use it to go fishing. Then the next biggest thing we've got is our capital. I never realised that some fishing rods are £4,000 or £5,000 each. Some of them are high value and they sell. Yet others, £50 to £100, they're quite good sellers as well. But it's mainly the high-end things that people are coming in for and they want to feel and touch them. So we have to get that balance right when we go e-commerce as well. Some of the financial key points. Our revenues are up 64%. Like-for-like sales are up 22%. The company's growing. We did have a profit warning last November, which is why we undertook a strategic review. We changed our management team. We changed the board. We did a fundraise, which was oversubscribed. And now we're implementing this strategic organisational review. Some of the recent events, as I've just mentioned, the trading update from November, we undertook an operational review. We're focusing on focus it on e-commerce. We sell so much online. 26% of fly fishing, one of the disciplines, we sold to North America last year. That's a market that we need to grow with. We know that we're shipping to Europe. We know we're shipping to Eastern European countries. Let's get e-commerce correct. There's a huge demand there. They like the goods. We never had a strong senior leadership team. I was appointed as a COO. We never had one. We had a CEO and a finance director. I've now got a head of merchandising and buying, someone that actually understands the retail market and what a range plan should look like, what type of products and how many we should have. We didn't really have a head of logistics. I've changed our warehouse to a distribution centre. Everything gets delivered centrally, and then we ship out to supply our stores, or we ship out to customers. Before, things were just getting delivered everywhere, and if an online order came in, we'd transfer it. I'm getting told about time. As I said, 1.3 million was raised as a fundraise in January. It was oversubscribed. A lot of that was with shareholders and directors. This is our summary and outlook. New senior management team, new growth initiatives. We closed a non-performing site, and there's plenty of opportunity here. Thank you for your time.